Great. Very good. Okay, so as we said, and just in summary, again, I'm David Pipe. I'm here with my co-host Rob Kent. Rob's a local realtor, and I'm a mortgage agent. And this webinar is for anybody who's thinking of moving to Guelph. And so we'll get started just by giving you a brief overview of what we're going to do. Tonight from us, you can expect to get some information about Guelph, some local insights, things to think about when you're considering Guelph as a place to move, or if you've already considered Guelph and you're ready to jump in, some things for you to think about there. We're going to talk about reasons why working with a local team can be helpful. We're going to talk about some of the benefits and advantages of working with a local team here in Guelph or in any city when you're moving there. We're going to talk about the money part. We're going to go through financing, talk about some of the things that you might need to know to get you through the mortgage process with the absolute best mortgage for you. And of course, we're going to leave time for Q&A. So with that being said, why don't we jump right in, Rob, and maybe you can tell us a little bit about Guelph.
Yeah. So number one in Canada. So we were ranked, Guelph was ranked number one in Canada by Money Sense just last fall for best place to buy real estate in all of Canada, not just in Ontario, but all of Canada. So it's a very fast growing city. And then the next slide is going to show us the where we're at dollar wise. So this number here, the 688,500, this is the median sales price in Guelph just last month. So in January 2021, this includes all homes, so detached, townhouses, semis, condos, everything included. This number, so 688,500, this represents a 37.7 increase in value over this time last year, and almost a 12.5% increase just over December, so just over the prior month. To put that in retrospect, usually what we see typically from year over year is an increase in value of 6%. So 6%
Wow.
to 37%, it's huge growth that we've seen over the last year.
So I want to go back to the first slide there, because we
Yep.
skipped over that. But number one in Canada place to buy real estate in 2020. I think in 2019 we were like number two. So
Yeah.
do you know what's contributing to that, or do you have any sense of what Money Sense was doing when they were sort of evaluating us versus all other cities? Because we're not the cheapest, right?
Right.
But how does that all work?
It just goes like standard of living, right? So, I mean, Guelph has one of the lowest unemployment rates, right?
Yeah.
And it just the what we've seen is an influx of people moving to Guelph.
Yeah.
So with when COVID hit, you don't necessarily have to go into work. A lot of the people who work from home realize that they don't necessarily have to live in the hustle and bustle of downtown Toronto, Mississauga, Brampton, and they can, relocate to, a city that's maybe a little bit smaller, but still has all of the things that you're looking for in your lifestyle.
Right. I read a lot too, from the money side that, they were very particular in what they said it's best place to buy real estate. So a lot of that too is also from an investment perspective. So
that's right.
What we're saying is that, prices are up quite a bit. So, this continues to be a, ongoing conversation, but as far as investments go, it's a great place to buy real estate because, rents are relatively high, property values are expected to increase. So if you're looking to Guelph as a place to buy maybe an investment property, I think they're factoring all these things in because of the expected future value of your investment here in Guelph.
Yeah.
Great. Well, why don't we dive in deeper to some of the unique things about Guelph?
Yeah, for sure. So not all neighborhoods are the same, right? So what you want to do is you want to think about like the type of neighborhood that you want to move into if you're a growing family, So David, one of the main things that people are looking for now are schools. So they're looking into schools. They want their children to go to great schools. So school zone is one of the biggest things that people are looking into now.
Yep.
A couple other things would be something like parks and trails, like, close proximity to some of the bigger parks that we have in Guelph, some of the really beautiful parks. And is weighing out whether you want an old, mature neighborhood versus kind of the new builds, the up and coming ones that are closer to maybe access to the highway or something like that, right? So it's about what I can do is, I help you find the right home based on the lifestyle of what you're looking for.
Yeah. For me, you know what, when I look at this, the thing that stood out for me was I've been in Guelph. We moved here about, oh gosh, 13 or 14 years ago now. I wasn't born here, but, I'm raising my family here now. And the thing that it's important to me is not necessarily what it looks like right now, but what's it gonna look like? Right. So, I made a joke the other day with somebody who lives in my area of town, that there's an empty plot of land that's been sitting empty for 15 years, and nobody knew what was going to happen there. But, they just read that, there's a gas station and McDonald's going in this area. And it's literally right behind, a subdivision that would have been, really nice homes, all single family, detached. And, some of those people are probably pretty excited for the late night McDonald's runs, but some of those people are probably not too pumped about the lights and the traffic and stuff. So I
Right.
think that knowing what to look for and what not to look for and some of those unique features about the city that might guide you towards a certain area can be really, really critical, as you look to moving to any new town.
Yeah. Yeah. It looks like Vanessa knows what you're the area you're talking about.
Oh, maybe Vanessa lives in Guelph. Yeah.
Yeah.
Yeah. No,
So,
I'm talking about actually it's Eastview and Watson area, Vanessa. Yeah.
oh,
Yeah.
yeah. But yeah, no, yeah, it's about knowing what things are coming up, right? Because if you have a beautiful view of something, and then, or you have your home backs out on conservation, the next thing you
Yeah.
know, that conservation's wiped out, and now you've got new builds in behind.
Yeah.
So for
No.
a year, you've got dust coming into your home, and all of a
Yeah.
sudden, your beautiful view now is of somebody's backyard.
Right.
Um, or there's several things to take into consideration, right?
Yeah, I think and on the flip side of that, I'm just thinking as a homeowner because I don't have the, I lean on somebody like you for the expert real estate advice, but as a homeowner myself, when we moved to Guelph, we were sort of in an area where all the builder we were working with or whatever. Remember, this is a salesperson, wasn't necessarily a realtor.
Right.
She talked a lot about, hey, there's a big empty plot of land back there, and there's a grocery store coming, and we're going to have some great retail that's close by that for getting the things you need, and 13 years later that land is still empty. So the point is that we need to make sure that not only those that are looking for growth, but those that are looking for things that aren't going to grow need to accommodate that or be aware of that at least. I see Eric's question. So yeah, you know what, Eric, that's a great question. I think that what we're seeing really is things that probably Money Sense didn't expect. So for everyone else, Eric's question was, do we think that Guelph will still be a good investment town, given that we've seen, on the first slide, a 37% increase in 1 year? So yeah, the short answer is that relative to other cities, yes. I mean, Guelph is a great city to buy real estate in. It will continue to be so because the underlying factors are still the same. A lot of what's driving this real estate price increase is timing related. A lot of it has to do with people working from home. So we've got a supply and demand mismatch, right? So supply and demand are both temporary things that might exist right now, and what we're really saying is that without going into too much detail, we've got a ton more demand because a lot of people from some of the bigger cities don't necessarily need to drive into work as far anymore. So now they're looking at their, single or semi that in Toronto or Mississauga was 300,000 or more expensive than Guelph. Now they're coming here, and I volunteer for a local kids hockey league, and a number of the parents this year were all coming in from Toronto, and they said, "Listen, we bought a big house in Guelph because I'm not driving to work every day." And Rob sort of talked about some of that in the highway access part, but yeah, I
Yeah.
think it will still continue to be a good investment. I think that it really depends on your timeline, because in the short term, you may not see that level of increase forever. Um, and I think that to fall on your follow up question about a level playing field, yeah, it's a great question. I think what we've really seen is you will see some leveling between we'll call the GTA and the greater GTA and some of the outlying areas because of that commute restriction where people just wouldn't drive more than an hour and change, and now it's happening. I think you will continue to see some more leveling out until, those two get closer together when supply and demand start to match up a little bit better. So yeah, without going into it too deeply, I think you will still continue to see price increases in places like Guelph and other cities that are around the GTA, at the expense of mostly condo prices in Toronto. Not necessarily single detached, but mostly condo prices because people are trying to, move up into a single or into a semi here in Guelph. But good question. Sorry, Rob. What
Yeah,
are we
no,
missing
no,
on this
no
slide?
worries. Yeah, yeah, no. So yeah, and then just maybe and the other thing too is like access to transportation. Like when you move here, maybe you don't drive, but you need access to go or train or something like that. So it's knowing the areas of, and that would be the downtown core predominantly where you would maybe move to. The other thing is like the students, right? So if you're moving and you're a family,
Yeah,
do you want the movie Neighbors, where
yeah,
you have your family, but then you've got Zac Efron partying and having frat parties at
yeah,
2 a.m. beside you? Is that what you're looking for?
yeah.
Because you really want to know what neighborhood that you're moving into.
Yeah, and Guelph has a great university,
Yeah,
a great university town, good university culture. But the reality is that there are areas that are really close to the university itself, which are
yeah,
great single family areas, beautiful homes. And there are also some sections of some streets in the same area that are highly dense with students, right? So,
yeah,
you just have to have a bit of a unique sense of, where in town you see more and more students. And this is changing all the time. I mean, um, you just have to be aware of that and get some help with somebody who can guide you down that path without sort of going too far out of where you wanted to be.
yeah, yeah. Like I would say the South End probably two things. It probably has the most student dense areas, but it also homes the most $1 million homes as well. So it's just about picking the right pocket, right? Um,
Exactly.
so the other thing is like specialization, specialized areas. I don't know if people on this call are aware, but so Guelph has termite zones, couple
Yeah,
of
when I hear
termite
that,
zones.
I always ask, like, what exactly does that mean?
Yeah, so well, I mean, there's a couple of spots where that have termite infestations and stuff like that, and these are not disclosed. So it's all about having your realtor let you know about these areas and stuff like that, and not just termites, but different things. Another thing too is Guelph has a gated uh, area, a gated
Community.
region, yeah, that's called the Arboretum, that is strictly just for people 55 and older.
Right.
So I've gone in there, shown properties, and then you find out that well, you got to be 55 to purchase the property in there. It's got
Right.
strict guidelines of getting in there. And then
Right.
the other thing is, government housing, right? If you're family, do you want to live in pockets that have government housing, or is this something that you want to stay away from? It's just so many different things to kind of keep in mind, right? About buying in the right neighborhood.
Right. And the point really is that um, a lot of these things wouldn't necessarily show up on realtor.ca, right? A lot of these things
No,
wouldn't
yeah,
necessarily show up on an MLS listing. So, we all get excited about buying a home and we go out there and I mean, let's be honest, I do it too, right? We start
yeah,
looking online and you start looking at pictures of houses and it looks great. But, the important thing is once you get serious about your search, find those insights that can really maybe rule out an entire area. Like you're mentioning, Rob, the Arboretum.
yeah.
The house prices there are actually pretty reasonable
They are. They are
for a couple of
reasonable.
reasons, right? It's
Yeah,
there's because there's high fees
yeah,
and like common fee, monthly fees because most of these people don't want to do the work themselves, and secondly because it's like a captive community where you don't get the general demand from the rest of the population. So,
yeah. It is.
it's important to know that hey, this house looks really great. I wonder why it's inexpensive. Well, that's why.
Yeah, yeah. That's why. Exactly. So yeah, it's all about location, 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 right?
Yeah,
You
exactly.
ask the questions, and then your realtor should be asking those questions as well.
Right, right. And did you want to mention local business?
So yeah, well, yeah, it's so and it's what are the best local hotspots and local businesses to support since COVID, even well before COVID, but even more so now. It's supporting local, right? So it's about knowing the spots of who to support.
Yeah. I mean, there are a
and where
lot
they
of
are.
great, I mean, our downtown is great. We have a lot of unique and different restaurants and,
Yeah,
knowing, what's your lifestyle, right? Are you, hey, we want to try a different coffee place every night. Hey, we
yeah,
want to, do more of that entertainment. Hey, we want to, do more. You just have to think about, how those areas might fit into your lifestyle. So yeah,
yeah,
that's really
exactly.
important.
Yep.
Okay. Well, why don't I move on? And I think this is important. It's a good segue is, we talked a little bit about, the things you have to think about. Well, how do we tie this into, what can you do about it? So there's things I need to consider if I'm going to be moving to Guelph. There's important things that might not show up on my MLS listing. There are critical, unique features about the neighborhoods and the homes and so on. Um, well, our advice to you is to find a local team, find some folks who work locally who can help you. And I mean, diving right into it, I think Rob already made a great point about knowing the area. We made that example about, um, about the McDonald's opening up. So, who's going to know the area, past, present, and future, to give you the information that you need to make great decisions? And that's going to be important because some of the history about some neighborhoods might make a difference for you. Um, the next part I think is really important, Robin. I think we talk about this, but it's about being locally connected. So local realtors like yourself, local mortgage agents like myself are connected in the community in a way that you want to build a team. So we're talking to all you home buyers. Really the way to do this right is to build a team around you of experts that can help to get you the best outcome. So, we talk about getting your realtor in place to find you the property and to help you negotiate that transaction. Of course, I talk about the mortgage person. I mean, none of this works if the financing doesn't work. But it's not just about that. There are other components that become really important. So having somebody that can recommend a great local lawyer, maybe somebody can help you with that transaction, someone that can recommend, maybe you're going through the home inspection process and you need to make a repair or you need to get the cost of repair and you need to be connected with a reasonably priced local plumber or electrician. I mean, Rob, we talked about this before, is how often do you become the de facto welcoming committee when you have a new client move to town? I mean, like
Yeah.
this, what kind of things have you seen happen before?
Yeah, well, I mean, like, so I've made it my mission to build great relationships with trustworthy professionals, right? So I can help you find the right people during the home buying process, whether it's, a lawyer, the interior designers when you move in, home inspectors, plumbers, handymen, cleaners, even things that you don't think about when you move here, like, something like a mechanic
Yeah.
or a dentist or something like that, it's about referring people to professionals and people that you know and trust as well, right?
Yeah. Yeah. I mean, when my wife moved here to Guelph, she came from Milton, so we might have some callers or some people on the call from that area. And for a little while, she went back and went to her same optometrist. But sooner or later, you want a local recommendation, and if you don't know a lot of people in town, um, I think that at least I know that people are often calling you and asking for that help, especially when it's stuff pertaining to the home, because they may have to go through it pretty quickly. They buy the house, they need to make a repair, or they need to make a change, or they just want some opinion on something quickly. I mean, I've gone through house buying processes where I needed someone to find a local person who was an expert on septic systems. Like I don't know anybody who knows anything about septic, but I'll tell you, the realtor did.
Yeah.
Right, so that becomes really important, and I think that's really the key. The next point is, not only do we want to help you by referring people to you, that or sort of by referring you to people in town that can help you, whether it be that mechanic who's not going to take advantage of the situation, right through to that lawyer or that electrician. But Rob and I are local businesses that are invested here in the community, and we talk about how we support in the community and how we give back time, but and that's important. But what I'm really leaning on in this case is we are invested in the satisfaction of the buyers that we work with here in town, which means that word of mouth becomes really important. So what I'm really saying is that our success is dependent on your satisfaction with the job we do. So what I mean is that if we can go above and beyond to help our clients, and that really helps our business. And so working with a local team member essentially means, or a local real estate or mortgage expert, it means that you're going to get the absolute highest level of service because our name is in this community and our reputation is in this community. And it's important to us to continue to build on that, to continue to grow the business. So we are certainly invested here locally and invested for the long term.
Yep.
Sandy has a question about, is there still undervalued or affordable areas in this market? Rob, what do you think about that?
Yes, but it's tough they're tough to find. Undervalued, I guess my question would be what would be undervalued? Like, are there deals out there? It's tough to find a deal.
It's a seller's market, is what you're
It's a
saying,
seller's, yeah, it's a seller's market right now,
right?
and homes are selling quickly, and for over. So
Right. So, I mean, affordable is, of course, a relative term. And I think
yeah,
relative, I mean, a lot of the people on the call tonight will be from out of town. So, relative to Halton region, Peel region, Toronto, and, certainly affordability is a lot of the reason why people do move into Guelph. But for those who are coming from other cities or, smaller towns that maybe don't have the same, price premium, or if you're already living in Guelph, yeah, it is a relatively big sellers market. And so that gets into the financing side, is making sure you can maximize your approval, and we can talk about that. Rob, do we miss much here? I think that the other thing that's important is seeing the trends before they become national news. But did I miss anything else in this slide that you wanted to call out? I think that's important.
no, just yeah, I mean, yeah, so it's about the trends, and then looking at the trends, the local economy,
Yeah,
the unemployment rates, knowing, and so the realtor, it's knowing the days on market and
yeah.
the sales ratio, and knowing how much a property is going to sell for, and then passing that information on to your clients, right?
Yeah. And, further to Sandy's question about, is there affordable areas in town? It's a great question. And I think the last point about taking stress out of the process, what part of what we mean there is that, I know I'm talking about what Rob does on the realtor side, but it's about knowing value. So in today's market, it's a lot harder in some cases to really know value. So, there was a time when a house went on the market and sold for 95% of asking or 98% of asking. So you pretty much knew that the numbers out there and the asking prices and the markets were related, and they were sort of reasonable. Today, what I hear from my clients is, and Rob, I know you go through this, is that houses don't necessarily sell for asking price. People put it up with a sort of unrealistically low asking price, and it's frustrating for buyers, but this is what's happening. And
Yeah,
so we can help home buyers here in Guelph and in other areas, but we're talking about Guelph tonight, take some of that stress out of the process by
yeah,
knowing what the real value is, so that you're putting in offers that have a high likelihood of being successful, although you can never be sure.
yeah,
It helps to minimize your stress. And Rob, I think we've talked about this before, but are there ways that people can maximize their chances of success, aside from just having the highest offer? I think that connects to
yeah.
who do you know locally in the community, how are you connecting the community, and what have you done, or what can we do to help somebody like who has a question like Sandy, because I think it's a great question.
Yeah, so well, it's a funny thing you mentioned that, because just 2 days ago I had a client. We won an offer. We were competing with 32 others. There was 33 offers in total, 32 other offers. We won, but we did not have the highest offer.
Really?
We actually had the third highest offer. So they elected to go with us because, I build rapport with the listing agent. I let them know who my clients are, why they're a good fit for the property. And I go out of my way to make sure that I'm doing everything I can for my client, whether it's submitting a letter on their behalf, or video even,
Right. So you
um,
mean to the sellers?
to the sellers.
Yeah.
Yeah.
So
Yeah. Yeah.
so
No, that's exactly it. And letting them know the financing, letting them know that your financing is strong, right?
yeah, yeah.
Because right now what we're seeing is it's 32 offers. So a lot of offers are firm, and I won't get into conditions and clauses and stuff that go into agreements. But it's about giving them the faith that our offer is still going to be good on day of closing, and
Yeah.
that they're picking the right people to move into the property. The
Yeah.
sellers handpicked us,
Yeah.
basically.
Well, that's incredible.
Yeah,
We always think that, going into this, that, me, let's pretend I'm the buyer, and you, let's pretend you're the seller. It's really easy to get into this feeling like it has to be an adversarial, winner. There are winners and there are losers in this
yeah,
transaction. And
yeah,
in order for me to win, you have to lose, right? But the
yeah,
reality is that it doesn't actually have to work that way. And for you on the realtor side, if you have a good connection with the realtors in this market, you may be able to improve that communication with them
yeah.
to find out what kinds of things might be important for their sellers that maybe aren't monetary.
Right.
And we're not
You
saying we're
get
not saying for a second that money is not important, because of course
no.
people want to get the most for their house. This could be the
Yeah,
retirement fund, it could be, whatever. But the point is that there are often non-monetary ways, and if you present yourself to the listing agent in a way that makes your offer compelling in other ways, that may influence them to recommend it to their seller, even though,
yeah,
in your case, you were not, like, there were 33 offers, so we're not talking about an uncompetitive situation,
yeah.
and you were not number one or number two.
No.
And so what you're really saying is that that seller left money on the table,
Yep.
in exchange for the story, the feeling that they were selling their house to the right person.
Yeah, it's about, kind of tugging a little bit at their heartstrings to let them know that this is a real family moving in there. And
Right.
maybe I don't know much about the other offer or who they were, but maybe they were maybe it was an investor looking to rent out the property in a
Right.
family kind of dynamic neighborhood. So, it's there's different things to look at
Yeah.
in each offer, right?
Right. I mean, you don't want to be the faceless buyer,
That's right. Yeah.
right? You don't want to be the faceless buyer. So that communication is so important. Yeah.
Yeah.
Okay. Well, I mean, speaking of all this, and speaking of how money's important, but it's not the only thing. Let's dive in, if we can, into the money part. So I just call this slide now the part about money. So first of all, I think it's important because maybe a lot of the folks on the call may not have worked with a mortgage broker or mortgage agent before. So a brief overview of what somebody like me might do. So my job is to work for you. I don't work for a bank. I'm completely independent of all the financial institutions. And my job is to basically, work with you to find the best lender who has the right mortgage offer for your situation. Whether it be, on the purchase, whether it be on the, refinance or whatever it is. But my job is to make sure that I find the right lender for you. And I work with the big banks, the big names that you're familiar with. Excuse me, I also work with, smaller banks. I also work with the credit unions and some large lenders that are as big as the big banks, but they only do mortgages, and then a whole other mess of other mortgage lenders that are, unique and all have different, what I would call, appetite. So they all are looking at a certain kind of customer as their customer, and if you fit into the particular box that, meets what they're looking for, they may have the best offer for you. And that's what I do. I basically make that connection, and that's why you don't pay for mortgage broker services up front, because the lender pays basically like a finder's fee every time you, sign up for a mortgage with them. So that's a really great way to get, sort of unbiased, no charge advice, instead of, your traditional bank branch, where that banker or that mortgage expert at the bank, they offer products from one bank, right? And they have a wide selection of products, but it's only what their rates are. So, each bank only has, usually one 5-year fixed mortgage for, each sort of general category. So anyway, that's what we do.
Oh, so
Set.
David, we've got a question here. So
Oh yeah.
Elizabeth's asking, does it make a difference if you have or don't have a deposit check included with the offer? Well, I guess that one's fielded for me.
That's a you
Um,
question.
but yeah, so very rarely do I see a deposit check included with the offer. Would that strengthen the offer? Absolutely. And if you're offering more, because it typically on the listing, it'll have what is expected, right? So
Right.
typically it's between 10, 20,000. The more you offer them, and if you have a check in hand, yes, that does strengthen your offer.
Right.
Will it beat out higher offers, maybe. Um, but it certainly does.
Right.
Certainly does help. I hope that answered your question, Elizabeth.
That's a good point. And from a mortgage side, Elizabeth, and for those, a deposit check, just so you know, is included as part of your down payment. So,
Yeah,
if you have to put, let's say you're planning to put, 10% down, or 20% down, that deposit check forms part of that, and you don't have to double pay that amount, just so
that's
that
right.
you know. So,
Yeah.
some people always worry like, hey, if I give them $20,000, how do I make up the rest of my down payment? And you don't, because it comes from there.
Yeah. You're
Um,
just paying it off a little bit earlier. That's all it
yeah, you
is.
just
You're
have it
without
sooner.
that money for maybe 30 to 60 days a little bit earlier, right?
Yeah, and I won't get into this, but there are actually some advantages from a mortgage perspective to doing it as a deposit versus doing it as a down payment. So ask me later if you want to know the answer to that. So secondly, about mortgage rates. So, let's talk about mortgage rates. It's really simple. They're going to go up. So mortgage rates right now are historically low. If you've at all been house shopping, you know that they're low. The Bank of Canada, has sort of uncharacteristically, so uncommonly, shown their hand and said that they're not going to go up right now. They're not going to go up until we see the economy in full recovery. Economists, nobody can really answer that question, but it looks like it'll be probably 2022. It could be later this year, but it's unlikely. So the good news is that you have a little bit of time for rates to stay where they are. But these things can change very quickly. And it's a really good idea to, if you get a pre-approval, just so you know, your rate is locked in, and held. And that's really the best reason to get a pre-approval. Your rate's locked in and held for 60 or 90 days, sometimes 120, but most often it's like a 90-day hold. So that's important. Um, and I noticed Elizabeth's question. Oh, there you go. You got it.
Yeah, yeah, I thought I'd type it out.
Yeah,
It's pretty
perfect.
quick and it's basically, a bank draft. So Elizabeth was asking how you make
Right,
the check, and basically it's just a bank draft. You go to your bank within 24 hours of an accepted offer. The realtor picks it up, drops that check off to the listing agent, and
right.
then it's held in a trust account until closing, in which case it's then sent to the lawyer and the lawyer does their thing.
Yeah, right, exactly. Back to the mortgage side, I think one thing that I get questioned about a lot is how do I get approved for the amount I want? So a lot of people think that, there's only one amount that you'll get approved for. And I think what's unique and different that people may not always know is that the amount of mortgage that you might get approved for can depend on a lot of things that could actually be in your control. So, we overnight we're not going to be able to change our job and double our salary. That's not really what I'm talking about. Of course, if you had a higher paying job than you do now, you could get approved for more. But what I'm really talking about is something as simple as the way you struck, like if you were able to put more money down versus less money down, that could affect your approval because the ratios that lenders use have a lot more flexibility when you go over 20% because they don't have to sort of abide by all the same rules. And if you're under 20%, it's a lot different as far as the rules go. Um, the other thing to know is that, there are sometimes expenses that you may have that can affect your down payment, or sorry, that can affect your approval. But maybe your down payment amount could be reduced a little bit. Instead of increased, it could be reduced. And paying off that expense, which has a monthly payment, things like car payments, credit card are usually the most common ones, or any other sort of personal loan that you might have. Those things are really critical. And if you can, minimize those payments, every dollar that you don't have to pay every month, as far as like a recurring bill, becomes right back onto your approval. And believe it or not, a $400 car payment or a $450 car payment, somewhere around there, if you remove that, that can have an impact of around $100,000 on your approval. So
Yeah.
think about that for a second, right? If you have a car payment, let's say you have a used car loan and your payment's 450 a month, say 500 a month, and you're paying that off, and it's going to be paid off in say 6 months. Well, so maybe you've got a balance of 3 or 4 thousand or $5,000, and you're thinking about how you might structure your down payment. Well, taking some of that down payment and using it on the car loan could actually amplify your approval in a way that could add $100,000 to the amount you get approved for. And
Wow.
I have this happen with clients all the time where they don't realize these ways they might be able to get approved for more, and somebody just puts this into a calculator and doesn't tell them about the strategy, right? So
Right.
that's really important. Somebody asked a
So yeah, there's a
question.
couple questions there for you, David.
Yeah,
Can
so
mortgage rates be fixed for longer than 5 years?
that's a great question.
Yeah.
So yeah, the answer is yes. So you can see as high as as a 10-year mortgage right now. And believe it or not, 10-year mortgages are not nearly as expensive as you might think. So if you can go, if let's say that you're thinking long term, right? There's a couple of advantages to getting a 10-year, and I don't very often do them, but if you're open to that, two things happen. Number one, you lock in your rate through a much longer cycle, and it gives you way more certainty in your future payments. The next thing about that is that, and we'll get into this about penalties in my next point, but the penalty on a 10-year mortgage, the way that they calculate it is that after 5 years, the penalty is the same as a variable rate mortgage. And that may not seem like a big deal, but the penalty to get out of a fixed rate mortgage is usually enormous. And the penalty to get out of a variable rate mortgage is usually 3 months interest. It's mandated way by law. So once you get to 5 years and 1 month into your 10-year mortgage, they have to treat that last 5 years like basically like a variable mortgage. So there's no additional penalty that way. My point is that yes, you can, and there are some reasons why you might want to consider it, but it's not for everybody.
So what would be the difference then of say and I you know now I'm now she's peaked now my curiosity's peaked. So what would be the difference then between a 5 and 10? Sounding like a 10-year option might be better if you're not penalized more than a 5 year,
You're not
knowing that
penalized.
the interest rates are going to go up over the
Yes,
next 10 years. 100% the
yes,
rates will be higher than they will be today 10 years from now,
yes,
right?
yes, yes, they will. And right now, you can get. I think there are some lenders doing a 10 for just under 3%. So
Okay.
relative. So a great mortgage rate right now. We'll set aside insured mortgage rates because those people pay a penalty in the form of an insurance, which I could talk about. But let's say you had 20% down.
Right.
A good mortgage rate now for 20% down is just under 2%, under 2%. Maybe it's 1.8, maybe it's 1.79, and there will be give and take here. And but let's just say it's under 2%. Well, you'll
Right.
see some institutions doing 10 years for under 3. So, for the first couple of years,
Yeah.
you will be paying more than somebody else. And it's significant. The difference between 2 and 3% is a lot. Even though it seems like it's only 1%, it's actually a 50% increase in the amount of interest you pay. So think about that, right? Because it's 50% more. The 3 is 50% more than 2. But in the long run, what you'll find is that mortgage, as rates go up, will become really valuable. So
Yeah.
student loans and OSAP, yes, student loans and OSAP, they do affect your borrowability. They're a liability just like anything else. If you're not currently in repayment status, there's a way that they calculate it automatically. But yes, student loans do affect it. That's a good question, and you're welcome. And to Elizabeth, you cannot no. Can I mortgage to myself and write off the cost? Yeah, so no, you can't. And if you could, you'd have to claim it as income on the other side, right? So let's say you
Mm.
wrote a mortgage to yourself and charge yourself 5% interest or something. You'd have to claim that interest income on the other side on your taxes as the same as, and mortgages in Canada are not tax deductible. So um, it's a good question, but unfortunately, no. It's great if you had the money. If you had the money, frankly, you're better off to invest it, and we can talk about that. But if you don't need a mortgage, then you're better off to take that money and invest it because even getting a mortgage at 2% and then investing at 5 or 4 or whatever is a better idea. So, but we're getting a little off topic.
Yeah.
So the
Right.
next point,
Yeah.
I know, and I could go all night. The next point that's really important, and I actually think this is the most important thing that people often ignore on the mortgage side is knowing your exit strategy. So we touched on this a little, but everybody talks about the price to get in, right? Everybody talks about their rate. and everyone thinks that the rate is the be all end all, right? You might even talk about it with your friends. Hey, what kind of rate did you get? Oh, my guy scored me a 1.7 or whatever they got. Or I saw a commercial for 1.39. Can you believe it? Um, well, yeah, that rate's important. Don't get me wrong. But I think what most people don't do is they don't think about the price of getting out. And about 75% of Canadians still choose a 5-year fixed rate mortgage, even though there are other options out there like longer terms or like variable rate mortgages or shorter terms. And the penalty to break or prepay that mortgage for any reason. So I need to move, my family changed, my family got bigger, my family, I need my job change or whatever. The penalty can be enormous. If you Google mortgage penalty, realtor. I think she was in Stouffville or Caledon, but there was a realtor actually that even realtors sometimes get hit with this. But she had a $60,000 penalty to break her. I think it was like a $650,000 mortgage with TD. So the big banks tend to have really high penalties, and so don't forget all about the penalty in the pursuit of saving yourself 0.01 or 0.05%. That's all I'll say about that is know your exit strategy, be honest with yourself about how long you might live there, and consider hedging in a way that if you had to make a change, it wouldn't destroy any of your growth or your equity or your down payment. And lastly, on the mortgage side, I think a lot of people know this, but on mortgage brokers, I see every different kind of unique situation. So self-employment, incorporated, commission sales. I had a client last night who was, it was a family that it was a blended family, and they wanted to both keep their old houses and buy a new house for them to live in together. And they wanted to find a way to, rent out those two places and have that basically be able to qualify to hold 3 mortgages. Meanwhile, their income didn't go up. And we're going to find a way to do that. So, there are a lot of different unique situations that come up. What if you're on CERB last year? COVID affected all of us. What if you're self-employed? So, don't be afraid to ask questions. Contract is a great question, Eric. We can talk about contract. So contract income is includable. What they often do is if you have a variable income like that, they'll look at your last 2 years of taxes. So maybe they'll realize, okay, well, this person works contracts, but over the last couple of years, they make on average X number of dollars. So, every situation is a little different, and I'd be happy to talk one-on-one, but yeah, there is a way to account for all different kinds of income. But that's a good question. I think that covers the money part. We're going pretty long, but why don't we jump right into the process? So if let's say you wanted help, or let's say you were interested, or you're just not sure what happens next, Rob, why don't you tell us a little bit more about what happens next?
Yeah, so I mean, well, how does the process start? So the process starts with you and your family basically coming up with goals, setting your goals. Where is it that you want to move to? What type of home do you want to move to? Neighborhoods, and it's about gathering that information amongst yourselves. A lot of so what we see is a lot of people start off with just kind of looking online, maybe spending a lot of time looking online, when the process really should be started with the mortgage broker.
Yeah.
With getting your pre-approval and getting your financing in order and finding out how much of a home you can get, right?
Yeah.
I
Yeah.
think
And
that's
I'll just jump into the question.
yeah.
I'm not sure if it's he or she, but writes, what happens if I'm on probation? I just started a new job. So the answer is that I have a client right now in that situation. So they are starting a new job. I think this week was their first week, and their first paycheck won't come in until 2 weeks from now or 3 weeks from now, and they want to buy a house basically very soon. And their probation's 90 days, which is very common. So depending on your situation, if you're moving in the same industry, let's say, hey, I had a job working for, this hairdressing company, and I found a nice place that was closer to home, and they paid me a couple of dollars more per hour. So I'm going to move to this hairdressing company. Well, you're staying in the same industry. You didn't lose the job. You're just making a jump, but you're going to be on probation again. There are lenders that will allow you to basically get a pre-approval and an approval and while you're on probation. And some of them will even let you close while you're on probation. Although that's tougher, certainly given the amount of time you have to close. So let's say you put an offer in today, your probation could end before you close and you would be fine
Yeah.
in a lot of cases. So great question.
Yeah.
Sorry, Rob, please.
No worries. So yeah, and then once you find out, you get pre-approved, you find out your financing, you find out how much of a home you can afford, and then now you start looking, right? You start looking a little bit more seriously. Um, and again, so it's like choosing wisely. Right now, there's no open houses. We do have virtual open houses and showing. So when you go to look at a home, right now we're only showing homes with people that are serious, and that's why you get pre-approved first. I know there might be agents out there that that will go to showings with people who are not necessarily approved and haven't visited the bank. I don't do that. I only go with serious buyers that would be able to put an offer in on a home if they were,
Yeah.
if they like that home, right?
Yeah,
So
but that's also partly out of just the way the environment is. People don't want people in their house because of COVID if they haven't done their homework. And frankly, if you hadn't gotten pre-approved or done that analysis with your mortgage expert or hopefully mortgage broker, somebody like me, you won't even have time to get it done before the offers go because that house will sell so fast.
yeah,
So it's
that's
really
yeah,
not
well,
in your
and
best
that's just
interest.
it too.
Yeah.
Good point, David. Good point. Yeah, yeah. Gone are the days where you can go into a home, talk about it, go take a look at it again a week later, and kind of kick the idea around for a few weeks. The fact of the matter is, homes are selling in days, not months, not
Yeah.
weeks, but days, literally, like less than a week, and for more than asking, right?
Yeah.
So. Yeah, so then it's getting an offer in and getting accepted, and be patient. This can take some time. It can take some time.
Yeah.
The My clients that I that bought just on Tuesday, this past Tuesday, I've been working with them since November. Just last week alone, we went to, I would say, 10 to 12 showings and
Wow.
submitted 3 offers last week. All of them, we didn't win any of them last week. So it is a game of patience, right? Um, and there is going to be competition out there, but it's about trying to get yourself in the right position to get the right home, right?
Yeah. Yeah. And I mean, it happens, right? I think I told you this story about, the clients that I had that put in a few offers here in Guelph and you would not believe this, but literally
Yeah,
gave up and said like, and we're going to pick another town and they moved to North Bay. And that
yeah,
seems so out of the ordinary, but
yeah,
the reality is that it can be competitive.
yeah,
So have patience, work with a good team, work with a realtor who can help manage expectations for you. So,
yeah,
my sister's looking at buying right now. She doesn't live in Guelph, but um, she goes on MLS or on Realtor.ca and sees houses listed at a price that looks like is in her budget, and then she
mm,
realizes that that's not the price.
yeah, yeah.
So just have patience and communicate openly with your realtor about your budget and get that information up front so you can feel really confident going in knowing that like this is what we could do.
Yeah, they should be setting your realtor should be setting
Yeah.
expectations up front with you, right?
Right.
Um, and then so yeah, and then you close. You get your deal closed, but it doesn't stop there. It's we keep in constant communication. I keep in constant communication with all of my clients, to make sure that everything's going smoothly with their home. Or like we had talked about before, maybe they're looking for somebody for renos or something like
Yeah.
that, right? Rob, do you know a new reno? I get this all the time. Rob, do you know somebody who can do a bathroom for me, or that where can I get my kitchen done or something like that? And it's about providing that information as well, right? And
Right.
referring out to professionals.
Yeah, so
So
we oversimplify the process here just to
yeah,
give you a sense of where to start.
yeah,
But there are a lot of things into it, and I show people this 10-step process just for the mortgage. So there is more to it, but the point is that you got to go through these stages and bounce back and forth.
yeah.
So Eric has a great question. Rob, it's probably for you. How much on average would you find that houses are going for over asking
Over
price
and
in
go up.
Guelph?
Right. Yep. A good question. Good question. And so yeah, again, that comes down to neighborhoods. It can vary. So my clients, when we won, and again, keep in mind, this is not the winning offer. This is not the highest offer. It was the winning
Right.
offer, not the highest offer. But we had gone in 37.7% over No, no, sorry. It was just, yeah, 37% over asking.
And range of price, like not specifics, but like, are we talking over 1 million? Are we talking over 500? Like, what's the range of price? Like,
So it was a home that was listed for about 400,000.
right,
It sold for like over, so it sold for 550. So Eric, to answer your question on that one, that was 150,000 over asking. Now that's over asking. That's not necessarily 150 over market value, because what we're seeing a lot of the time now too is listing agents, for whatever reason, I don't get it. They're listing the homes super low to get as many people in the home as possible,
right.
and the
So it's
sellers
just
are okay
about
with this.
excitement. If I list the house way low, people get
Yeah,
excited. I mean,
people.
and
Yeah, yeah,
if I'm the seller, I get why that's, an attractive sounding strategy. But yeah,
yeah.
Vanessa took the words out of my mouth, is that they want to encourage people to
Pay
name
more.
their price,
Sure. Yeah,
right? So
yeah,
it's a good question. And
yeah.
Vanessa, you got it right there. Now, Sandy asked a question about what's the difference between a buyer slash investor focused realtor as compared to a seller focused realtor. So are some realtors mostly doing buyers and are some realtors mostly doing sellers? What's the difference in there?
Uh, yeah, some just work with some realtors just work with sellers. Some realtors just work with investors, and some realtors also just work with buyers. I mean, I work with everybody. I work with people who are looking to buy, sell, and invest. I don't really deal with commercial very much. So I
Right.
try to stay away from commercial because that's more of an expertise kind of thing. But yeah, I hope that answered your question, Sandy.
Yeah, that's a good question. So having said that, I think we did a pretty good job of covering the basics of the process. Of course, there's more, and I think it's important for everyone to know that if you want to get into detail, we can help you do that. But in the time we have, we won't go through all that. But now, I mean, we've done a lot of this already. But let's, Rob, if you're good with this, let's just sort of open it up for Q&A
Sure.
because we're sort of getting close to the end of time, and I want to be respectful of everyone's evening. So at this point, this basically concludes the big picture of the presentation. First and foremost, I want to say thank you to everybody who attended, from myself and from Rob. Our contact information is here. We'd love to reach out to you, connect with you afterwards. If you have questions that you didn't ask or you didn't want to ask publicly, no problem. Reach out to us. We're going to open it up for Q&A. We're going to encourage everyone to unmute if they want to talk or chat or ask questions. If you're unable to stay on, no problem. We're going to pause the recording now and give everyone a sense, a chance to sort of speak up if they have something you want to share, or if they want to essentially just ask more questions. So